Welcome to another episode of The Insider. Today I'm joined by Vishwa, who's the co-founder of Anera Labs, and I'm really excited to have this conversation because he's one of the few rare breeds of like solvers in the ecosystem. So we get to finally ask all of the hot questions for solvers. Right? Welcome, Vishwa.
Yeah, thanks for having me, Arjun. Good to collaborate again. I have a bone to pick from our last collaboration, which I'll get into during this episode. But yeah, I like to introduce myself as probably the only solver with a face and an email ID, and so that's like a cross-chain one.
Yeah, definitely the only solver that I've talked to until now. So if anyone is looking for a solver, you can always reach out to Vishwa. So Vishwa, let's get started with like your story. How did you get started in crypto, and what are you building right now?
Yeah, I think this story can go pretty long because my story with like when I got started with crypto is a very old story and it's a very sort of accidental story. I first heard about it, or I first called it a scam in 2014, after which I invested in it a few months later in 2015. And then 2017, I think I was like a year and a half, 2 years into my TradFi job, and I just saw on my Bloomberg terminal this Bitcoin thing is just like exploded in value. And so I went to go and check like how much is it worth in whatever I bought, and it was worth a lot. And so I decided like, okay, I'm doing TradFi stuff. Maybe I can do some like TradFi things with crypto as an asset. And so my first thing was let me do a fund to fund where I'll find the best funds to invest into, and I'll raise capital and I'll invest it into those funds. And so sent out like an email ID to all the crypto hedge funds that were featured in some Forbes article. There was 27 of them replied. I quit my job the next day. I took a flight to SF and I started taking meetings with all these guys. Few of them actually like even offered me board positions back then, and these are now widely recognized crypto hedge funds in this space that we all know. But out of interest of confidentiality, I won't really name any of them. Um, I gave a TV interview in India where I thought this is going to be like a great stepping stone because all the HNIs in India are going to watch this and they're going to invest because I'm the only one who can offer them this product. And a 40-minute interview became a 10-second headline which said, "Beware the scam that is Bitcoin," and my face flashing on it. And for some context, I come from a family of like legal professionals. So, my great grandfather was a judge, my grandfather was a judge, my father's a senior counsel, his brother is a lawyer. And we were all watching it together in the living room because they were just like, oh wow, he's like 22, 23, first TV interview. And cut to like them calling me a scammer. And that was like an interesting first experience coming into crypto.
Why were you giving a TV interview?
So actually, there was like a huge amount of investor interest at that point, where it became clear that there were a few people that were working on crypto in India. A couple of them were setting up exchanges. A couple of them were trying to do like payments. So they were thinking, okay, point of sales for Bitcoin and the Lightning Network and stuff like that. And there was only so many people to speak to about this thing. And so because the price was like increasing so much, it became something that was being talked about widely in media. And I had a friend of mine who was actually starting a company, and he was doing something on the enterprise blockchain side on top of Hyperledger, who recommended that I give this interview to explain the sort of investment thesis behind it. Because he's like, I have one friend in TradFi who's trying to do something with crypto. Let me give him this opportunity. And so he gave me this opportunity, and this person came, someone from Z Business came to my office, and she spoke to me for 40 minutes, cameraman, everything. And I helped get her set up with ZebPay, I think was the wallet and exchange in India at that time. And I told her, I was like, only invest what you're willing to lose, not more than 1-2% of your net savings is what you should do right now. And then over time, just like treat this as something that you would keep investing into rather than speculate on. And funnily enough, I spoke about ETFs and all of that stuff back then. Um, and then she just told me like, yeah, we're gonna air prime time today, so it's like 9 o'clock. And I thought this is gonna be great because I can use this interview and then use this in my prospectus that I send to other HNIs so that I can collect more capital. And then on the other side, I can let the hedge funds know that this is how much committed capital I have, and I can start allocating it and become like an LP in all of your funds. And then that sort of got derailed massively. And then India had a massive crackdown. And I ended up dropping the idea and becoming employee number one basically at my friend's startup, which was the enterprise blockchain one, where I spent a couple of years working. When you're on the enterprise side, it kind of felt more like a services company than a tech company at some points. And so ultimately decided to leave, went and did my master's in the UK, kind of started my entrepreneurial journey. After that, I built a company called Shill. It was a micro lending company in India, which did really well. Really proud of the work we did. Ended up exiting that, and then came back to crypto in 2022. I think peak of the all of the numbers and peak of the bull, everybody wanted to figure out what they should do with this asset class. Somehow I stumbled upon this niche of NFTs, media, entertainment, Web3. And a lot of people started coming to me and asking me for advice. And so I decided to do an experiment to see how many people are willing to pay me for their time. And in the first few months, everybody wanted to pay me for the time. So I started a consulting firm. And then after that, some of the consulting, they were just like, okay, we need this built out. And so I used my team that was working with me on the micro lending company to start building out some POCs for these clients. And one thing led to another. We had a really cool client base in the media and entertainment space. I was giving a talk about NFTs and Web3 at the Cannes Film Festival, and was just pretty much in the zeitgeist of that conversation until FTX happened, after which everybody's disposable income and marketing budgets went away, and so nobody wanted to do this. The last thing we did do, which was kind of cool, was we did like an NFT activation at the FIFA World Cup in Qatar with the Qatar Museum Authority, and that's when I sort of like got a sense of where crypto UX is lacking, because not a single person that bought those digital collectibles ever had a wallet or ever used any sort of crypto native rails. Like all use Crossmint, credit card, Mint, and that's when I was like, okay, there's definitely some issues here in terms of the customers that I'm targeting, and this mercenary consulting business is not going to work out for too long, and so I should take some time and figure out what was next. Um, I'm a numbers guy inherently, so I was drawn back to DeFi and started researching the UX layer, which is account abstraction is where I started. I think when you start doing account abstractions, you kind of naturally end up on intents, and when you still stick around with intents, you end up at MEV. And one of the main things that Conrad, my co-founder, and I started to investigate was, what does the on-chain capital experience and liquidity experience look like in an intent-centric world where you can basically enable any source of liquidity to fill any user intent? What does this mean for the market structure of existing liquidity? And we found that it would sort of like come at the cost of existing liquidity provision. And so we wanted to come together to put our minds and see how can we upgrade the liquidity primitive that exists in DeFi, which has historically been AMMs, to suit this multi-chain, cross-chain world, and also to be competitive with increasingly sort of like more and more private liquidity and market maker-driven liquidity. And that's kind of what Anera was born out of.
Got it. So, like, you went from being the scapegoat of India's crypto scam story to NFTs in 2022, and then you went deep into like the intense rabbit hole, and that's kind of the cycle, right? Like, you get into intense, you figure out, okay, there's this thing called MEV, you get deeper into that, but then most people look at searchers. So, why did you not become a searcher, and then how did you like figure out, okay, this is not something I want to do. I'm gonna start looking at the intent-based bridges ecosystem and then kind of build a company around this?
Yeah, great question. I think one of the things I've learned from like being a founder for the last 4 or 5 years across a few different ventures is that oftentimes our first instinct when we think we have a cool idea is that, oh my God, like nobody else is thinking about this. And then if you do enough research, like someone has definitely thought about it. And so that's kind of like the level of honesty that I started having with myself at some point last year, where I'm just like, you're not a genius. Just be resilient and stick around for long enough and let that be your edge. And so that's why I kind of like did not get into searching. Was I mean, I kind of like figured out, okay, I can write some stuff and I can put some stuff in terms of scripts in Python. I can figure out how to write. There's enough mev bots that I don't even have to deploy my own. I can use somebody else's mev bot to actually run this logic. But just seeing the nature of the competition and like looking at interviews of people that had been in searching that were no longer searching because of how competitive it got, led me to believe that I think there's going to be more value in understanding the market structure here, and also where I think the market structure is going, to be able to have some kind of edge in this kind of behavior.
Correct. So, like, you started this almost a year ago, or if not longer. So, what was the market structure back then, and has it changed today?
Yeah, I think where we started off with was we wanted to really specific on cross chain, right? I think that was the part where we started. I think we knew eventually that we were going to be more general purpose, because cross chain is something that allows you to be more competitive with even single chain, and I can get into that during the course of this podcast. Um, but we saw that to be new. We saw that to have sort of like a cold start problem when it came to having more solvers. I think early days when we started speaking earlier this year or late last year, we talked about how a lot of these intent-based bridges don't really have any other solvers, and most of the time it's the protocol owned solvers. And I think in our initial piece that we worked on together, the sense that we had was that this is happening because the protocol owned solvers have some level of edge, And I can say that, after sort of like 5, 6 months of, I would say 4 months of being in production and 6 months of really studying this, I don't think that's the case. I think protocol-owned solvers are recognizing that it's in their best interest to allow more solvers to come in and to start seeing profit from order flow. And for the most part, a lot of these teams have been extremely supportive in terms of having us integrate and having us succeed in terms of making a return. And so I would say the market structure has changed in that I think there are more and more players getting into this. And I do think that some of the players that, obviously we don't know who they are because they're just wallet addresses, are quite sophisticated. And so I suspect that they might come from a searching background, or they might come from a quant background, or at the very least come from some level of network optimization background, because they're pretty strong and they understand latency optimizations. They understand rebalancing from a market microstructure and inventory management way, and it's getting quite professional. And yeah, I mean, I've spoken to a couple of market makers. I actually helped one market maker get into a cross, and so doing my bit to make sure that we have more solvers coming in, despite me being one of them.
Got it. So, like, it seems like when you started, the protocol owned solver thing was more common because there's a cold start problem, right? Like, there are not enough solvers in the ecosystem. Someone has to do the job, so protocols would do it themselves. But today, because people are realizing that there's enough profit to be made, there are more and more market makers, searchers coming into the ecosystem.
Absolutely. And then also, like, it's important to realize that it's often in the bear market that we realize that there's a local maximum to a lot of the things that we're doing in crypto. And so if you're not a sort of like really one of the larger well-financed market makers that's doing a lot of stuff on centralized exchanges, you need to find as much order flow as possible so you can make as much money as possible on your prop balance sheet. And so that's a lot of people taking an early bet where they think like, there's a good amount of order flow every month on Across. There's a decent amount of order flow every month on Synapse. And there's more implementations like Everclear going live. Nitro and all of these guys is like, okay, good amount of order flow that we can sync some amount of our inventory where we can't really sync elsewhere. But I will say that to a large extent, for a large market maker, I don't think it is as attractive a business as their balance sheets are way bigger than the balance sheet that you need for doing all cross-chain solving today.
Mm-hmm. Got it. So I definitely want to get into like Everclear, ERC 7683, and a lot of the details there. But just trying to make a fundamental understanding here. What does a solver's setup look like, right? Like, how many people do you have in your team? What sort of skill set is available to you right now?
Yeah, I don't think we're a representative sample of the larger set of solvers, because we're actually not like solvers, right? Like we're building a protocol, and so this has very much been R&D for us. Like it's not really been that important for us to be the best possible cross-chain solver. It's been more about understanding market structure here, and frankly speaking, like we've not really been doing too much more on the cross-chain side. We've actually started to now looking more closely to the single chain side and trying to understand what competitive edge look like over there. And this is not because we're trying to be solvers, but I think we're realizing that on the liquidity provision side, there's a significant opportunity here. And so we're trying to unlock what liquidity provision looks like in a world where all order flow is auctioned out, whether it's through FCFS or whether it's through a CowSwap style auction or whether it's through a Dutch auction. These new auctions allow new liquidity sources to be integrated, which come at the cost of existing liquidity sources, not being utilized to fill those orders. And so I think that us really working hard to figure out if AMM is what the liquidity primitive of DeFi 1.0, what is the liquidity primitive for DeFi 2.0, and how is it maximally capital efficient? And that's kind of where most of our time, energy, and resources are spent. And so we are a larger team. We're about 7 people, 8 including an external research partner, and we'll be 12 people by the end of this year. But that's primarily because of our focus and attention on the protocol design side. I think if you are just a solver and just a cross-chain solver, you don't really need to be more than one person. If you're cracked, like Copium Capital is one person, and that's like the number one CowSwap solver. And if you're a cross-chain solver as well, I see no reason as to why you need to be more than one person, because I don't think there's enough money for you to go about and like hire 5-6 people doing this cross-chain solving thing at the moment. And so I don't expect the teams to be bigger than like 1, at max 4, depending on where in the world they are and like if they're sharing profits or if they're paying salaries. Like, yeah, I would say 1 to 4 people. And the other question you asked was about setup. So I think setup is a couple of things, right? I think it feels very sort of quant. It feels very like you are basically looking at how quickly can I see the order flow and ingest the order flow, and how quickly can I submit my bid or my transaction to be the one that wins the auction because it's all primarily been FCFS. And so you will design your network stack to basically make sure that your RPC connections are continuously steady with all the chains that you want to solve for. And in some cases, you will probably run your own nodes as you start to reach that local maximum of what latency needs to look like. You will manage inventory. And so typically, I think the basket of inventory that most solvers will have today is like primarily USDC and WETH, because most of the money moves around in these assets. In some cases, you'll see some that hold on to WBTC, but you're holding majors. And so this starts to feel a lot like market makery as well, because inventory management is like an entire school of the market maker discipline. And so you make sure like, sure, I'm filling, WETH orders, but I need to make sure that I'm also hedging against the volatility of ETH, right? So when we started, ETH was worth 3,800, it's about 2,200 or 2,400 today. And so if I was not hedging, then I've basically like not really made any money, because 40% of the value of the asset has changed. And unless you're marking out to ETH, which means that you're just someone that is like a ETH maxi, or like by design you can only hold ETH, then just your markout asset, and so everything is fees on top of ETH. But this is typically the setup, right? Like I need to be able to manage my inventory. I need to be able to rebalance between chains where I see the most utilization and opportunity, and I need to manage latency. So this is why I say it's very like market makery.
Awesome. I have a bunch of questions. I'm like trying to pick up the right questions in my head. So, like you said, a single person can actually just start solving, right? How much capital do you think would be ideal for them to start? Is it 10,000, 50,000, 100,000?
It really depends on like what you're trying to do with this. I think if you're trying to make a living out of this, you'd want to be at least like, I think we started to make decent money when we started with our initial balance sheet of like 40K. So we were not doing terribly with 40K. Certainly enough to pay one person on 40K.
So, how much would you make
I
with
think,
40K?
man, also the margins have changed quite a lot over the last 6 months or so. Yeah, I think if you caught if you caught the early wave of some of the solving, you were making way more than you're making now. But I think a good sort of heuristic is that if I had 40K, my goal would be to do at least 400K per day in volume, which is like conservative, because like the only thing I can do is keep rebalancing, because I will run out of that 40K with the order flow that exists. So if I'm doing 400K, that means I'm probably doing about like 12 million a month, and I can imagine on 12 million a month, you make about like, depending on how good you are with rebalancing, depending on how many profitable fee earning routes you've made, we're talking about anywhere between 3 to 5K in profit. And this is just like on today's margins. I think earlier this year it was double that. So you're making like 6-7K doing 10 million in volume, sometimes even 10K, depending on how profitable those routes were. So yeah, I think you can make easily more than $4,000 a month with 40K, which is an incredible return, right? It's like that's like your capital is 40K. You're kind of making 10% per month. Annualizing that is almost 200% when you compound it.
And then, is this directly proportional? Like, if I start with more money, do I end up making more money? And that's where, like, maybe market makers are better placed to kind of capture some of the value?
I think it's certainly headed in that direction. Most of these systems are now starting to give you the ability to quote. And so this is where there's like a big difference now in terms of where this market structure is heading. And so I think we spoke about this earlier, where we said that we should be allowed to price and not really have the sort of like protocol quote the price on our behalf. And these things are like becoming more commonplace now. There's exclusive order flow windows for solvers that are willing to provide competitive quotes. And this very much trends towards the entity that has a larger balance sheet that is capable of taking a lower margin, because they want consistent volumes. And so yes, now we're definitely headed towards larger balance sheets. Now, this doesn't necessarily mean that you have the same liquidity turnover ratio. Like if you're at 40K, you should easily be doing 400K per day. But if you have like a $4 million balance sheet, it's going to be really hard for you to do 40 million per day in volume. Like there's just like that much order flow to take all of it, and to take all of it, assuming all of it has profit, that's going to be tricky. But where that extra money helps is with not running out of inventory on profitable routes. And I think that's the biggest thing is like, oftentimes when we were operating the 50K balance sheet, we look at the data and see, oh damn, if we would have rebalanced on this route, we would have made this much more money, and that becomes an interesting segue into what Everclear is doing. But yeah, the extra money does help.
Okay, and then, but don't you think like so? Let's say you have to continuously rebalance, right? And money does play a big part here. So let's say a 40K solver is of course at a disadvantage to a solver with $4 million, but then some of the bridges that are actually pool based, they have like tens of millions of dollars in liquidity, right? So how do you compete with that?
Um, Well, they have tens of millions of dollars of liquidity, but it's not free. There's sort of like there's like an incentive game that works with keeping that liquidity there. And to a large extent, I think where some of these liquidity network-based bridges have not been able to compete is on the actual speed of transmitting that message, so that you're able to do that. So I think that's been a both a speed problem and a capital efficiency problem. And intent-based design just ate their lunch, and that liquidity became even less utilized because I mean, you guys sit at the top of this, right? Like Li.Fi and Socket, you guys aggregate most of this flow. And oftentimes you sort of like want the users to prioritize between price and prioritize between speed. And this intent-based trade-off said that we're going to give you amazing speed at pretty competitive prices. Like, I mean, the data is there. Like, I think you and Hart did an episode recently. I think the value that users get from this still exists, which is why I believe they're using it. And there is that trade-off of like speed versus price, and some users choose speed, some users choose price, and it really is like a design space that's open for
Yeah, like
many people.
how Hart explained it was that the intent based bridges prioritize speed, and that's why the auctions were first come, first serve, right? But what you're talking about right now is that's changing, and we're moving towards price optimization as well. So, are you seeing this actively in bridges today, or is this more for like single chain solving?
Yeah, so FCFS is now getting a new look, which is it gets a almost like an RFQ slash exclusivity window that comes before the FCFS auction. And so you're allowed to basically keep providing quotes to be the exclusive filler in some of these bridges, like Across is testing this out on a few routes. And if the order is triggered on source chain, the first thing that they will do is look for the quote that has come from the exclusive filler for that. And assuming that the code is like either there's no code or either the code is good, then that order is going to be filled by the exclusive code. It's not going to go through the FCFS auction. And the idea was to be like more gas efficient, reduce the gas overhead of like this latency race that solvers are trying to pay, instead of them like wasting money on gas to these L2s. Like, why don't you just provide a code instead? And so we'll try to match it. So I don't think it loses speed. It actually becomes more efficient for solvers, and it also forces them to potentially provide quotes continuously, update those, and assuming nobody like provides that, then it goes through its regular route. And so I don't think speed gets reduced, but I do think there's some uh, efficiency that's coming out of this kind of structure.
So, speed only gets reduced in case the exclusive solver cannot fill, right?
It's a pre-stream, so they already know that that value for the exclusive code is null, and so it automatically triggers the FCFS auction. So the FCFS auction almost happens as usual. I would say like the difference is it's you'd not be able to distinguish it with a stopwatch even if you tried.
Okay. Yeah, I mean, Hart was explaining it like, okay, we can have intents fulfilled in milliseconds. So definitely, at least my stopwatch is not going to help for that.
Yeah, for sure.
Okay, so like the next question that I have is around the rebalancing, right? Like that's always talked about. There's Everclear that's coming up with a entire new primitive just to solve this problem. So how big of a problem is that, and how does that scale with like the number of chains a solver expands to?
Yeah, this is a great question. Funnily enough, we spoke to Arjun earlier this year, and we had sort of like had a few things in our notes as like, damn, we need like some way to clear all of this stuff. We need some kind of clearinghouse mechanism. And yeah, when we first started speaking to him, they were kind of like really far into Everclear, and that was really cool because I'm like, okay, someone's doing this, and so this is going to be great to see because it was a big problem, especially if you're a smaller balance sheet. Like that's the big difference here is like with a small balance sheet, this can be really efficient for you to be competitive, and that's always been Arjun and Connext's vision to make it such that the smaller solvers can be competitive so long as they can get some level of economies of scale from the netting out of each other's flows. And I think that's a really strong and powerful vision. Um, I'm optimistic that it'll work really well for the smaller fillers and solvers to be able to rebalance themselves. However, I think it is going to be interesting to see what happens as more and more of the cross-chain systems, like for example, Uniswap X go live. So Uniswap X is going to prioritize swaps, right? So they are going to actually ask you to price, okay, what is the quote that you're providing me for USDC if someone wants to swap ETH to USDC between two chains? This, to my mind, is not something most of the existing fillers can do. This is something that market makers can do. And market makers have large enough balance sheets that they'll probably know what they want to have cleared. And they also know when they want some of this stuff to be cleared. And so it's going to be interesting to see how these things play together. Um, but I certainly think that it's a very valid problem that they're solving, and they had a fantastic vantage point on it as well because they had Connects routers for really long, and they could kind of see that behavior in Connects routers for really long. And so I definitely think that they're solving a problem that they face, and certainly we faced. We're going to be both a maker and a taker inside Everclear when they go live, and so yeah, you have my Telegram and you have my email ID, and you know where to find me for any feedback and further discussion on Everclear. Right now, I'll just say, like, we've been integrating, we're working with their team, and excited to see how this helps us with capital efficiency on our primitive.
Makes sense. And I think you brought up an interesting point, right? Like how a lot of the filling works right now is just the same asset on different chains. But if a Uniswap X wants to do cross-chain swaps, then the assets on the balance sheet also need to increase. So then the hobbyist solver actually cannot compete at the same level anymore.
So the assets on the balance sheet don't necessarily have to change too far, which is not to say that someone's going to hold MOG on the destination chain because they think it's like that's just not something you can hold. But certainly the sort of skill gap is a little bit higher here, because you do need to be able to figure out, like, okay, assuming that I'm doing like the majors, you can just assume that the majors are going to be dominated by entities that already have big balance sheets of these assets, right? Like if you go to Arkham, you can just go and find SCP's wallet. You can go and find Wintermute's wallet. You can go and find Toka Labs' wallet. You can go and find Flow Trader's wallet. They just have a lot of these assets, right? And so if they have a lot of these assets, they're just like in a really good position to fill these orders if they want to. I think the biggest edge and arbitrage you have right now when you're doing some of this cross-chain stuff is that these guys just don't think it's interesting and big enough for them. For their aspirations, it's like tiny, it's minuscule, right? Like they want to move hundreds of millions, if not billions per day. And the cross-chain order flow landscape is just not suited to that. And that is edge in and of itself, because you are grateful that you don't fall within their categorization of meaningful. But it will become harder for some of these fillers that are just doing single chain stuff, because you're going to have to like adjust yourself to become a bit of a maker with greater sophistication. Like, I don't think you will be able to provide quotes on a swap without having integrations into centralized exchanges to figure out what price deviation is and what alphas are on the centralized exchange. Because centralized exchanges, and Binance in particular, is the price setter for all majors in our space, right? And so you're going to need to increase the integrations that you have. If there are many people with integrations, you're going to increase the sort of latency infrastructure you have and the speed with which you transmit that information. You're going to start to be able to develop like predictive models of like, okay, what is the correct portfolio construction for the next 3 minutes, 5 minutes, 15 minutes, hour, 3 hours, 5 hours, because these are already things that market makers have out of the box. Like, this is just what your engine looks like.
So it seems like we're technically not really reducing the barrier to entry, right? Like you said, 1 year ago, maybe a lot of the things could have just worked out without some of these sophisticated skills. But because market makers are coming into the picture, the order flow is increasing, competition is also increasing, the bar is also increasing, right? So for someone to just set up a solver over the weekend and think that they're going to be competitive is probably not realistic.
I would say so, but I think sometimes our space has this incredible fascination with like reducing the barriers of entry, and somehow conflating with that to reducing the standard of excellence. I think if you talk about early days of MEV, you had anybody with an internet connection could become a searcher. It was just new, right? Like, it was just a thing you could do because nobody else was doing it. And over time, that asymmetry goes away if there's sufficient value. I think it's good for the space if the space is valuable enough that sophisticated players are coming in. Because at the end of the day, like if we zoom out and focus on the end user, the main thing is the end user getting what they want to do? Are they getting better execution quality? Are they getting this feeling of atomicity? Are they able to move value around seamlessly between chains? Are we abstracting away the chains in the background? Because is it then really important who's abstracting the chains away? Like, is it important that a market maker is doing it or a layer zero multisig is doing it? Like, it's happening, right? And so, like, if it's happening, is this giving room for applications to design new stuff and onboard new users? And I think, yes, largely this is happening. if there's more value to be captured and it sort of suits the skill sets of sophisticated actors that can capture it, then I think it's hard for us to think that the smart thing to do is reduce the standard of excellence of the space, right? Like you'd want to increase the standard of excellence of the space and have competition amongst a set of actors with an increased standard of excellence. Because there's also more equity creation through that, right? Like hobbyists don't create equity. Our space needs long-term equity to have like longevity. And that's where the equity value of our space increases as well. So I think this is all like good stuff. I think sometimes the narratives can get overblown about like barriers for entry and standard of excellence.
I mean, the barriers of entry are like coming down in the sense that if the order flow increases, the better players are going to come into the picture, right? So we should be happy about that. Uh,
Yes.
and like, so just to wrap up this cross-chain solving kind of section, so you did cross-chain solving on across Nitro and Synapse for the last 6 months. What are your like three learnings from that experience?
Well, I think there's a few. So if you want me to stick to three, I will try my best. But if I go on for
Yeah.
more, then I apologize. Um, First things first, the implementation solvers that they all have are not going to be competitive. Um, you're probably not going to do well or win any order flow if you use the reference implementations. Reference, to be fair, they come with plenty checks and balances in place to make sure that you don't get screwed over or lose money or take unnecessary risks to begin with. And there's certainly training wheels there. But we sort of like realized very quickly that we need to design everything from scratch. And so that's going to be your sort of like first learning is that, okay, you need to have your hub, from scratch. Second thing that is a little bit intimidating sometimes is that when these protocols are pushing some kind of upgrades, you don't necessarily know. And that is pretty scary because some of them can screw you over, right? Like some of the upgrades might actually switch the headers and the addresses for
That's also the
beneficiary and
life
depositor.
of an aggregator, by the way. We're just like
There you go.
realizing that we have to change everything in a week or so. So by now, we've figured out a better flow for bridges to tell us in advance so that we can prepare
Okay.
for things. But like we can totally relate to that.
Well, I hope you guys will remember us and just tell us when some of the bridges are doing stuff so that we know that we have to check and our circuit breakers have to kick in. I mean, to be fair, like we also have that now in place. Like we have kill switches and circuit breakers whenever there's an update. Like we have a QA in house now, so we make sure that nothing goes into production without his say so. He used to be at 1 inch, so it's like he's seen that sort of high standard of excellence before. So there's definitely that, which was like kind of caught us off guard. And I don't know if I will tell the full story about what happened there, but probably off the record, I'll tell you because it was pretty bad. The third thing is that a lot of these guys have like kinks when it comes to rebalancing, and you need to be able to account for that in your models of which order flow you prioritize. So if you have concurrent order flow and you have to pick between which one, assuming you have like a finite amount of inventory on that particular route, the way you compute the rebalancing cost for each of these is kind of different. Um, Synapse, for example, it requires you to make 3 calls. You also have to basically like, you have to prove that you filled it, and then you have to also like call the claim function before you can get rebalanced. The router has its own state chain and accounting chain, which requires you to have its gas token root. And across is optimistic. It uses UMA and has a canonical bridge rebalancing. So there's differences here. And so when you actually, if you reach that level of optimization where you're trying to figure time and cost of rebalancing, you might actually choose one order over the other, even if it has lower basis points, because you think that it might come back to you a few minutes before, or the rebalancing costs might actually be lower with that type of order flow. And so these are I would say like these are the top 3 things that we've certainly learned, is that there's like nuance to how you pick these orders. And if you really get into the weeds about how you pick those orders, um, then you start to like cook a little bit.
Okay, so because of this nuance, would you say that we don't see solvers that are active on all of these platforms?
Um, Honestly, I am a little bit surprised that there isn't greater cross-pollination. Um, I think there should be, and I think there certainly will be, and I think intent markets was designed for that, to encourage that, right? Like, I mean, um, even though I might be shooting ourselves in the foot a little bit by increasing the competition that we have in the space, I do think it's kind of strange that you don't have more people doing this. I also, however, recognize that like some people want to specialize, like hyper specialize before they start. And it has been clear that, Across has been clearly the market leader for a while with the most consistent organic order flow that you can basically spend that time integrating into. And so until you feel like you've reached that point of, okay, I can do no more order flow in Across, I need to start doing more order flow in other ecosystems. Um, the likelihood that if you perfect Across, you'd be competitive in the other ecosystems is very high. And so maybe I think what we're seeing is people trying to compete for Across and like do really well there before they start to get into filling in other ones because they're going to face less competition or a less sort of standard of excellence in the other
Shouldn't
ones
it
with
be the
amongst
other way
others.
around? Like there's less competition, so they'll be better off starting on the other platforms?
That is in terms of the asymmetry, but I think in terms of like if you get your infrastructure and optimization such that you're winning order flow and Across, that's going to translate easily into the other ones.
Got it. Makes sense. And I think it's also just the order flow, right? Like we're talking about why MMs are not coming into cross chain solving because of the lack of order flow. So why would a solver go beyond across if the order flow just like keeps decreasing?
Yeah, and it's also the balance sheets, right? Like they don't have like the average solver, I think, has a balance sheet of anywhere from like 100 to 250K. There's a handful that have more than 500K, and then the protocol owned ones have like pretty large ones. So
Okay.
if you only have 250K and if you're like lights out on Across, I don't really know if there's any further room for you to have your inventory utilized anywhere else. Because that is like you're probably turning over an incredible amount of volume at that size.
Got it. And I also want to get your thoughts on ERC 7683 and how do you see across his kind of change of positioning in a way? Because initially I used to think that the solver network is the edge, right? Like because they have a lot of solvers, they can be more competitive, faster, and all the good stuff that comes with it, right? But my conversation with Hart, like I learned through that okay, solving is not where everyone is optimizing, right? Like these guys are opening up the solving so that anyone can come into the picture, and then settlement or like order flow generation is where people want to be placed at, right? So what are your thoughts on that?
Yeah, I totally agree. I think value accrues at the edges. Across and Hart, he's really smart. He knows that the sort of longer term play for Across to make here is reinforcing the brand. And I think they've done a fantastic job of doing that because as you reinforce the brand, I think there's like a flywheel of integrations that come through. And they're able to continuously prove that this is super high quality. And the more of a step back their protocol owned solver takes, the more money others make and the more solvers come in. And we've kind of seen that, right? Like, their reference implementations, they have two reference implementations that they continue to run within Across. Um, they have been designed in such a way that they don't get in your way, save and except for like very large transactions, which you don't want to fill anyway. And so I think that's been smart on their part because that's increased the sort of like stickiness of Across in much the same way as Cowswap has this sort of stickiness, right? Like Cowswap has this very expressive set of solvers that have come in, and Nosis's early implementations are no longer even competing for order flow. So I think this is smart. I don't think that solver networks per se are the edge, and I don't think that gatekeeping solvers should be the edge. I think if you are looking at the the order flow landscape, you want to encourage as many people as possible to solve as much as possible because you have a better global liveness for all of you rather than trying to hyper localize it. And I think that's when you start to play long term games versus short term games. And I think like Hard and Across, they get that really well. Is that if we can extend the moneyness property of this middle layer, which is our solver layer, it actually allows us to increase the brand premium of Across at the front end of the order flow side, and it also allows us to kind of like position ourselves with that settlement layer, which is super interesting. Right? I expect them to have a Solana implementation soon. I expect them to maybe remove UMA from the Across implementation and perhaps bring in some level of ZK at some point to improve it. Um, but I think
And
they've done it
then
really well.
like the other question is how do you as a solver look at something like ERC 7683?
I think it's an interface. I don't think it solves some of the problems of like that some of these intent-based systems have different kinks when it comes to rebalancing. Like it doesn't harmonize that. There's a unified standard for expressing it, which is an interface that applications can use. But this doesn't actually change the solver problem of like how do I rebalance and what are the things that I need to do to be able to rebalance. Like nobody follows the same interface there. And to a large extent, nobody follows the same interface there because there's like business reasons to not follow the same interface there, right? Like if you're like someone that's trying to create value for your state chain, then you want some premium for your gas token. And so you want solvers to hold it. If you're someone that wants to prove that your like Oracle is the best Oracle and secures the most value in DeFi, then you would use the Oracle to have that as like rebalancing, and so on and so forth, right? Like I think different people will want to have some different sort of designs over there. I think that's the part where it would be cool if there was like a unified interface for that. Like that would be like an awesome ERC. 7683 is like interesting, and I think it's a step forward. But ultimately, I think there's like a lot more pain on the other side of 7683.
But does Everclear kind of position itself on the other side?
Potentially, yeah, it does. I think it absorbs that complexity from the ecosystems themselves, and so you don't have to, as a solver, worry about that complexity. Um, I think the ultimate trade-off for a solver is going to be how much does this cost for me to use Everclear, and how long does it take? Because we know that flows can net out if you give it enough time, but I don't really want to wait 6 hours to see my flows netted out. Like I would much rather pay a little bit extra to get my money back in minutes, than wait for my flows to net out in hours. And this is something that we have expressed to the teams as well. And so while we're optimistic about Everclear, I think there's a few things that we'll only be able to tell with time and sort of like what the escape velocity is for an idea like that.
Makes sense. I mean, like anyone can do it in a day, right? It's about every 2 hours can you rebalance across 10 chains, right? Like that's
Two
the
hours is
big
long.
picture.
2 hours is long. Like if you're like a solver with a small balance sheet, which is Everclear's target audience, we should be thinking about like minutes, not hours. Because if it's hours, then the small balance sheet's going to run out really quickly. Like how long does it take for 40K of value to get bridged? In you guys sit at the top
10
of this, like
seconds.
10 seconds, right? So if your money's gone in 10 seconds and you have to wait 6 hours for it to get rebalanced, that's probably not like the best way for you to do it.
Okay, awesome. That makes sense. Are there any other solver risks that we haven't talked about that are kind of potent problems?
Sometimes L2 RPCs can be a nightmare. And so you are often like not seeing consistent state. And so you definitely should be cycling your RPC providers before you get to a place of I'm going to run my own node. And so you should have a heartbeat for each of your RPC connections. Because if you don't, then you will waste a lot of money on filling orders that have already been filled. And in some cases, it can be worse, right? Like maybe, you assuming that the block has been confirmed, but it hasn't, and you send the money and that money kind of goes away. So that's something that hasn't been covered that I think is a risk. I think we did cover sort of like the hedging aspect, like if your portfolio, how you hedge your portfolio is kind of important. And that's where there's also like network effects around what your portfolio composition is. If your portfolio is larger, you also have more of the ability to hold the volatile asset, which is why I feel like market makers have an edge, right? Like I have a $5 million balance sheet. I hold 80% USDC and 20% ETH, but my 20% ETH portfolio is larger than anybody else's 80% ETH portfolio. And so it's just like that's kind of where these things get a little bit hard. And that's where I'm excited to announce some of the stuff that we've been doing at Anera. It's like how are we changing this dynamic and how are we changing this market structure?
I definitely want to give you some time to talk about that as well. But before that, I have many more questions on the solver ecosystem.
Happy to answer all the questions on the solver side today, and then when we have an announcement coming out with like our full white paper and stuff, then we can have another conversation about what we do.
Awesome. So another primitive is probably the solver collaboration, solver specialization side of things, right? Do you think that that makes sense? Will solvers be willing to collaborate, and does that make business sense to do that?
Um, okay. Let me preface this by saying that I primarily look at DeFi, right? I'm looking at DeFi and I'm looking at DeFi where there's value. Um, if we're trying to look at what market structure might look like, we should look at CowSwap. It's the best representation of having an ecosystem with solvers and market makers, and there is a collaboration, but there's also a simultaneous competition. So let me explain. If you go to CowSwap's order flow, your number one solver is Copium Capital, right? So Copium Capital is your solver in the traditional sense, taker only, right? So like not a maker at all, which is they don't provide their private liquidity. They look for the best routes, try to generate surplus, and this is where they find value for users, and this is how they make money. The other two solvers that are really large in this space are PLM, which is SCP's solver, and Resolver, which is Wintermute's solver. Now, if you look at the transactions that these large market makers do between their maker and their taker, there's that integration of like they just use their private liquidity, and so they're using their liquidity to win order flow and cow swap. Like that's basically all they're willing to do. They're not necessarily willing to get into the routing. Like let's find where surplus is. They're just like no, let's just be a maker and let's not charge any maker fees to our taker, and that's how we'll win order flow, right?
Can you like
And
briefly explain the maker and taker difference? Because I don't know a lot of people would know that lingo.
yeah, sure. You have This is basically the person that's willing to sell expresses the price at which they're willing to sell. So they kind of are the ones that place the orders in a limit order book. And generally speaking, whenever somebody wants to buy, they want to take the assets, they kind of will express the price at which they want to take assets. And the order book will typically match this, right? RFQ systems is basically I'm asking a maker, hey, what is a quote that I can get for the assets? I want to take the assets from you. You have them. Tell me what the quote is, and then so the maker gives the taker this. When you talk about fees, you have both a maker and a taker fee. So taker fee is like how much a swapper has to pay, and a maker is how much a maker gets paid for the swap, basically. And then there's some nuance between how this is done with order books. There's like different prices, but that's the long and short of it. So bid, ask, maker, taker, all of this stuff is like kind of the same. Um, there's clear advantage to an integration here. The clear advantage here is that if you're both maker and taker, you're able to internalize the fees as a taker, right? Like you're able to say, okay, you know what? Like I am the same entity, and so somewhere I don't have to pay this fee because I'm the same person. And this is where it gets tricky for someone like an exclusive solver that doesn't want to hold any assets, especially majors. 70% of all of CowSop's volume is in majors, and 63% of that is filled using private liquidity. And so the more assets market makers are willing to hold, the less competitive solvers become. And this is the pitch for 0x or Bebop or Hashflow, right? These are sources that integrate directly into these solvers or these takers. And so they're not actually using AMM liquidity here. They're using some level of private liquidity. And so there is a collaboration that exists. The question is, how long does that collaboration exist? Because one thing I'll tell you for sure, the top CowSop solver today is figuring out how do I also get on the maker side. There's clear alpha and advantage for them to integrate. And so over time, I think people are going to realize that there's alpha and advantage for me to be on both sides and not just be a solver. And this is where my opinion kind of diverges from a lot of people in this space, that a solver can remain a solver, that doesn't have to be a market maker. And I think that if you want to be doing this long term with edge, you're going to have to find edge on the other side because routing is commodity. You guys do aggregation a lot, right? And if you wanted to do routing, you could do routing tomorrow, and you're much closer to the user than a solver is. So I think you guys are in a position to maybe even commoditize the solver business. From a routing perspective, the only thing that I would say aggregators don't have the skills for is how do we hold inventory to start to internalize the swap volume? Because I think that's where it starts to diverge from your core business. I think that becomes the edge long term.
So, is that the moat then? Just integrating on all different levels of the stack? Like you can hold your own inventory, you have the best routing algorithm. So that's how solvers build moats. And frankly, like companies, right? Like right now, it just seems like a solver can be a bot, but then a solver is not just a bot. Like you said, it has to become a company. And in a way, you have to build beyond just like routing or just like filling in with liquidity.
Let's ask ourselves this question, right? Like, what do we expect to or want to see happen 5 years from now in DeFi? And then we can work backwards. So if the first 5 or 6 years of our space was around free market AMM primitives that allowed price discovery for anything. So swap anything and let's launch 500 meme coins per day. And AMMs are an excellent way to do this because it allows me to provide liquidity on this, and I can figure out like how I want to rebalance my portfolio, whether I want to have concentrated liquidity or constant product. Like that was an excellent primitive. But I think a lot of us have talked about having more RWAs on chain. We've talked a lot more about like having assets that people have a demand for. Stablecoins are the biggest asset class in crypto. And now we're starting to see multiple derivatives of stablecoins. The other assets that have really taken off are like liquid staked and restaked assets. And we expect this to keep growing because you have new restaking primitives that are creating new assets that will have more liquidity. Now, both stable assets and assets that are sort of pegged in value to Ethereum or BTC or like whatever is the sort of like restaking primitive are all assets that market makers are willing to hold anyway, right? Like there is not much of a difference of me holding ETH versus staked ETH because the value is the same. It's just that I feel that ETH or WETH is used more, and so I choose to hold it, right? And so if we think that the volume of these assets is going to increase more so than the long tail, which it almost always plays out, like long tail makes a lot of noise because of the volume of like the number of tokens that come out, but the amount that is traded is always larger in majors. And so if we expect more and more majors to be traded, whether they're stable assets, whether they're RWAs, or whether they're restaked assets, we have to ask ourselves this question of, is there any edge in just doing solving for a long enough time period? And at what point does the edge become me holding these assets to fill these orders? Because these systems, in when it comes down to providing the best execution quality, you exhaust a much lower resource budget when you use private liquidity and have call the transfer function instead of calling a multi-call on an AMM. And so if you're a solver, you're doing many of those things. And if you're a private liquidity provider, you're doing one. And so even if the price is the same, the gas paid is less. And so over a long enough time period, I think the more assets that we see tokenized will be assets that have some level of price discovery. And so at that point, it's going to be the question of like, okay, which ones am I willing to hold from this to be able to provide liquidity?
Okay. And does that also kind of play into the AMM versus intense or like solving debate?
I think so. I think AMMs are an awesome primitive for anything, right? Like it's so cool to me that you can do that. It's like one of the most iconic DeFi primitives, maybe one of the most iconic inventions ever, right? Like this is super cool. I think it was like it was born out of some level of intelligence of prediction markets when it was first sort of like thought of. And I think I actually was lucky enough that during CSX, the first kind of talk that we had was Hayden and Carl. So Hayden from Uniswap, Carl from Optimism, talking about their respective stories. And funnily enough, Optimism came out of the need to support an application like Uniswap. And so they were thinking about like doing very different architectures before optimistic rollups, and then realized that this is the best way for us to support an application like Uniswap, which is really cool because like just listening to that story is kind of interesting. But if we recognize that Uniswap was like a pioneer in AMMs and now has a considerable amount of investment in both primitives, which are Uniswap X as well as Uniswap the AMM and B4, this is Uniswap itself giving us a sign that like we need greater flexibility to support a wider sort of range of trading that allows more expressivity for liquidity providers. And so I don't know if it's a debate of like which versus which, because I think it's well documented that it's more efficient to be a market maker when you're willing to hold assets that have price discovery. But if you don't have them, then AMMs are the best thing to just like basically it does it for you, right? And so it's super elegant if you're trying to launch something ground up, and it's like super free, super open, super permissionless. But yeah, I certainly do think that over a longer period of time, having new mechanisms to provide liquidity by having greater expressivity over sort of like how you want to rebalance, how you want to price, how you want to alter price, depending on size, depending on like routes, depending on assets. These are all things that will come into the fold, and I think Anera Labs will be a pretty big name to make that happen.
Got it. Thanks a lot for answering some of these questions. Like I've just asked you all of the questions in my mind, right? So like it definitely unlocked a lot of things in my head. Now I want to talk about Anera. Like what's next for Anera? What are you guys doing right now?
Yeah, I think we have like I said, we validated our architecture and design choices for what the vault primitive needs to look like for a cross-chain world. The next thing we're doing now is validating the design choices for a single chain world, and like how does it look like when we're trying to support order flow in a single chain world. Um, I don't want to talk too much about it because we have like some cool things in the works. Like I have like a really detailed research paper, and like we have our sort of initial draft of things that we're working on with researchers at the A16Z team, and just like trying to keep it a little bit, a tight loop so that when we announce it, we can announce it well and it's got enough feedback. So I don't want to leak too much. But definitely way more emphasis and focus on the protocol side, way less on the solving side. It's one of the things that we have to do given the size of our team and the size of our aspirations. I don't think any amount of cross-chain solving is going to fill that. And the only thing we can do is take an almighty swing at a protocol that has a small chance to succeed, but it's an asymmetric one if it does succeed. And so that's what's next for us, is like really heads down on describing in great detail what's problem our primitive solves and why we think this is a unique opportunity that really hasn't been tried before.
Love it. And I love the ambition, right? Like I hope you guys do really well. Now we can talk about the bone that we had to pick. So
This is important to address. And Arjun, I don't know, you should front run me and just address this out the gate because you know exactly what I'm talking about.
yeah. So 6 months ago, or I think in January, early this year, Anera Labs and DeFi collaborated on a research piece. So it was a lot of Anera Labs data that they published on intent.market, and you guys also had a research paper. And this was after like our initial few calls, right? Like we were kind of thinking about the same things, and you were like, "Hey, I have some data, and maybe we should collaborate on something." So I thought I did a good enough job just marketing Anera and the platform as well, but it turns out I did not. So we definitely need to talk about intent.market as a dashboard and resource for anyone who's interested in learning about solvers, interested in just figuring out how the order flow is flowing across some of the best bridges, the best DEX platforms out there.
Yeah, I mean, I joke, but it is funny because like a lot of people I was seeing, I was like, man, these people are shilling this and they're giving Arjun credit for this, and like I'm just like sitting over there wondering, like, hey, the article says there was another team that was responsible for the data and stuff. But yeah, just on that note, like not to shill too heavy, we have some cool things that are going to come to intent markets. But main sort of like public service announcement: if you're a protocol that wants to be integrated, there's tons of instructions on contributions on the website. Please submit PRs. If you're someone that feels like you're unhappy with how we have rated you or ranked you or characterized you, please submit a PR. It is open source. We are a capacity constrained team. We're trying our best to get to as many requests as possible. But if you want to either add yourself as a protocol or you want to question how we should improve the rating system or any of those things, please submit PRs.
I feel like there's like maybe I didn't do a good enough job marketing it, but there's organic mentions of the dashboard on Twitter, right? So I love to see that, and it's just a great resource. I feel like it's the best resource for intents right now. Just so that anyone who's listening to this would want to go and check out the dashboard right after this. Give me like one piece of information that's on the dashboard, but not enough people on Twitter are talking about it.
I think I tweeted about this recently. It was about the. Why am I blanking? You put me on the spot a little bit, but I did tweet about this, and so it was just like something which is often underappreciated about the dashboard. It was like fillers, protocols, inventory held. I think the one thing that we did talk about was the we have like competition and bids by size of order flow. And I think like that's like a cool thing to look at because I think there was a conversation with Kaido yesterday from Eigenlayer about like censorship resistance and competition. And like I mentioned that there's thresholds for this, and there's thresholds that you can actually like look at on intent markets where it's just like at this threshold, you have really good guarantees because of competition, and at this threshold, you have not so good guarantees because of a lack of competition. And I think it's pretty expressive, the amount of data that and sort of things that you can pick up on. The other thing we've done is we put a sand key, so that sand key now really shows you the entire movement of money between chains as well as in what tokens they're denominated. And so if you're a filler thinking which assets should I hold versus which ones I shouldn't, that's pretty cool. It tells you like there's maybe a few assets that if you're willing to hold and nobody else is willing to hold, that maybe you start to win a lot of those orders and that becomes your niche. And yeah, I think we have a few updates that are going to come on the filler side. So like individually on each filler, having a greater profile of their profitability, the gas they've paid so far, which kind of like L2s have benefited the most from, the gas that they've earned from particular fillers. And all of those things are going to come to. And for sure, if anybody has any suggestions on how we can improve it, submit a PR or like message me on Twitter, Telegram, whatever.
Awesome. Thanks a lot, Vishwa. I feel like this will be a really good episode for anyone who's interested in intents and solvers. And your insights are always helpful. So anyone who's interested in this space should definitely reach out to Vishwa and just talk to him about these things. That's all he thinks about every day. And I wish you the best, man. Like all the best for the future.
Thanks a lot. It's always fun to chat. I feel like we haven't had the chance to really do this, too much. We had a great interaction early this year. You guys were really generous with putting us on blast when we were literally just three people and a little bit of research. And so I'm glad that we can collaborate again, and I'm excited to continue to collaborate in the future too.